Hey everybody, happy Sunday, happy weekend. John Felici here, Security National Mortgage Company. And I'm just wrapping up a little bit of catch-up work here on Sunday today at the office. And my wife had said something to me before I left today about filing taxes. She hears me come home, and I have a lot of frustration sometimes with mortgage loans because sometimes people don't file their taxes in a way that is conducive to being approved for a mortgage loan. Now, what I mean by that is mainly I'm talking with self-employed people, because the thing is, I've been self-employed in the past and I know how it works. I mean, whenever you're trying to file your taxes, you want to do the best that you possibly can to pay as little tax as possible. Which, under normal circumstances, that's just fine. I mean, you want to use all of the benefits that the government affords us as self-employed individuals to be able to pay as little taxes. You write off as much expense as you can, etc. The problem with that is when you go to apply for a mortgage loan. The mortgage industry is essentially owned by the government. And so whenever, we show our tax returns to each other, and maybe I'm like, hey, look at this. I made $200,000 last year, but I'm showing a loss. Hey, I paid less taxes, good for me. But the thing is whenever you take that tax return to a mortgage lender to qualify for a mortgage loan, what happens is you're taken at face value. That tax return is taken at face value. And if you show that you have a $3,000 loss, when in reality, maybe it was much less because you got to find some deductions or offsets to your taxes, you're going to be taken at your word. And so that means it's hard to qualify for a home and say that you can afford a house payment whenever you're showing a negative number. Or even if you show, $20,000. I mean, if your adjusted gross is that much, then, you're going to be taken at that. And it's hard to qualify. So, some tips for people. I mean, self-employed people, be mindful of what you're filing in your taxes. Meaning that the amount of money that you show that your adjusted gross after you've already filed and written everything off, make sure that that number is consistent with, what you're actually living on, so that you can qualify for a mortgage loan if that's what you're trying to do. Another thing that I see quite frequently is, not self-employed, but like W-2 individuals. Now, when you're a W-2 individual, your taxes are taken out of your check as you get paid, so you don't have a lot of the same problems as the self-employed people. However, there's a part, the 2106, which is non-reimbursed business expense. Now, what this is let's just say that you're a W-2 employee, and maybe you drive, you do a lot of driving for your job, and so this driving costs you money that you don't get back from your employer. So you want to go ahead and put this in your tax return, you want to write it off, you want to try to get some credit back for that. Well, same thing is with the self-employed individual. Now, if you are making $60,000 a year, and in your 2106, the 2106 is the section of the tax return where you put the unreimbursed business expense. If in your 2106, you have, say, $20,000 written off for driving around or whatever it is that you do that you don't get reimbursed for in your job, then that money is taken from your gross income. So that if you make $60,000 a year salary, you've written off $20,000 in unreimbursed expense, well then your income is now qualified from $40,000, not $60,000. Makes it a little bit harder to qualify. Now, whenever you have mileage as a factor in the 2106, you can add back in some of the mileage that you've had. There's, the IRS comes up with an estimated, mileage gets, say, 22 or 25 cents per mile. And we have a formula for, dividing out the total miles, and then we can add back in some money, so that can be helpful. But, a lot of people, they're just filing unreimbursed expense without consideration for mileage. So if it's just plain out expense, like you spent money for your job, you didn't get that money back, you write it off. Well, I mean, maybe that's good to do. I don't know exactly what the tax break would be. That's a very specific thing for the person filing the tax return. But as generally speaking, be very mindful of those types of things. For example, if you're thinking about doing a mortgage loan, in the next 1, 2, 6, 8, or 10 months, whatever, maybe you're a self-employed person, or maybe you are W-2, and maybe you think you might want to file some unreimbursed expense. Get in touch with me, and I can explain to you, what exactly is going to be counted against you, what you can keep, what you cannot keep, and maybe I can help you so that you understand what you need to have in your tax return to qualify for a mortgage loan. But just generally speaking, always remember, the mortgage industry and the government, we are literally in bed together. So, the answer for the IRS is, it's like, you come to me and you say, oh, hey, John, it's like, I know that it shows that I only made $15,000 last year, but come on, I made more than that. But the answer, whenever you pose that scenario to the IRS or to a mortgage lender or underwriter, their answer to you for the solution is to go back and amend your tax return and pay us the rest of the taxes that you owe us on that money that you made above and beyond what you show on your adjusted gross. So, everybody, I hope that you guys have a great weekend. This video, mainly, I just want to, let people know, consult with me or another mortgage professional when it comes down to what you need to qualify to buy a house whenever you're filing for, say, like your self-employment income, unreimbursed business expense, because, after you've already filed the tax return, it's more difficult to go back and amend or whatever. So I'm not saying that I can give you tax advice exactly. I'm not a tax professional. I know what it takes to qualify for a mortgage loan, and I can maybe help you understand what areas of your tax return are going to affect potential application for a mortgage loan. So, hey, everyone, I'm getting ready to get out of here. I think I'm going to go home, and me and Kara, we're going to cook some steak, sit around, and probably do absolutely nothing. So, everybody that is after me, you can get after me tomorrow morning. If you got questions regarding your tax return, qualifying for a mortgage loan, you can message me here on the Facebook, or you can give me a call, 918-630-1991, or email me, jon.fleege @snmc.com, john.fleege @snmc, as in Security National Mortgage Company.com. Well, hey, everybody, I have a good day, and I will talk to you soon.